Hi, and welcome to the EnerNova Partners Energy Market Update for July. My name is Doug Schaefer, and I am the Director of Client Strategy for EnerNova Partners. And just over the next 5 or so minutes, we're just going to kind of walk through what's kind of going on in the natural gas and power markets currently in the U.S. So if we take a look at, current pricing, you can see month over month, natural gas prices have been down, even with this extreme heat. We've seen a lot of strong production, and we'll talk about those things in the next couple slides. That's been helping keep a lid, on the market, but power prices have been a little different, up slightly from a month ago, depending on where you're at in the country. ERCOT, we've seen some prices actually drop off there, even with the scorching heat that they've been experiencing down in Texas and the hurricanes. They've been getting a little bit of everything on the weather side. So let's just take a couple minutes and we'll go through some of the market fundamentals that we watch to kind of give us an idea of the impact they're having on in the market. So currently right now, again, the biggest driver in the marketplace is the weather. We continue to see a lot of heat throughout the U.S. June came in as the hottest on record since 1950, and that was coming off of the, May being the fourth warmest since 1960. So we'll see how July, trends here over the last, couple weeks and see where we finish. But the heat is expected to stick around. You can see in that 8 to 14 day, the Ohio Valley and a little bit of the East Coast may catch a little bit of a break. But again, the overall trend to kind of finish out this summer, and even as we head into September and October into the fall, we're still expecting above normal temperatures throughout most of the U.S. I am stuck here. Here we go. Sorry about that. Natural gas storage. Natural gas storage has been one of the biggest factors kind of keeping a lid on especially natural gas prices. We continue to have a surplus of natural gas when you look at the year over year and the 5-year averages. Storage levels right now are at 283 BCF, higher than last year. We actually saw that surplus actually increase this past week, which was like the first time in 8 weeks. You can see this dark blue line was just trending closer and closer to that goldish orange line. And we actually saw a little bit of a bump up. So that's one of the things that the market is looking at. If we continue to keep that gap, that surplus, we'll definitely keep a lid on natural gas prices. If we start to see that surplus disappear, which most of the people in the market are expecting that surplus to kind of be gone by, end of fall, early winter, that'll kind of switch to more of a bullish type indicator if that surplus disappears. We're still expecting at the end of the year for storage to be anywhere from 3.9 TCF to 4.1. We could break the record of just over 4 TCF of natural gas in storage. But again, we'll continue to see how this plays out. And if we continue to see, warmer temperatures and strong demand from the power burn sector, we'll continue to eat into that surplus. Moving on to natural gas production, we kind of came off, starting, in February, we saw a steady decline in production. Suppliers were reacting to the lower prices. Starting about in the beginning of May, this purple line started to trend back up. Prices started to move up a little bit. Producers started to, produce more to capture that slightly higher price. So we'll continue to kind of watch that and see, with prices continuing to come off on the gas side over the last, month or so, we'll kind of watch and see if producers, again, pull back on that production to try and get the prices propped back up. One of the things they'll definitely look at is, as I mentioned before, is that surplus. From a producer's side, you definitely want to see that surplus disappear. From a consumer side, we want that to stick around as long as possible. So rig counts, obviously key in the natural gas production and oil. We actually saw a rig increase on the natural gas side. We were up 4 rigs last week. But overall, we're still down about 18.5% from the 124 rigs that we had a year ago. So again, another factor we continue to watch and see that activity and how it will possibly show up down the road as far as production numbers go. Next factor, natural gas demand. You can see the spike we've had in demand over the last couple of weeks, again, due to the heat and due to the power sector. Basically, about half the natural gas demand is coming from the power burn sector. We're right around, 80 BCF, and roughly 47 of that, a little more than half of that, is coming from power burn. And we expect that to continue as the heat continues to kind of have its grips on the U.S. Over the next couple weeks. LNG exports, we continue to, we saw LNG exports come back online. They've recently dipped about 2 BCF a day. Most of that is due to Hurricane Beryl that caused the Freeport facility in Texas to shut down. They've been having some issues short term, and I believe 3 of the trains, about 2 BCF a day, is not being processed for export. So that's good. That's more natural gas that stays in storage. It's not leaving the country, but we would expect those trains to return to service here probably within the next couple weeks. And when you start looking at a longer term basis, there's still going to be growth on the LNG side. We're going to see more and more natural gas leaving the country as new facilities come online. By the end of 2025, we'll probably have an additional 8.4 roughly BCF, million metric tons, that will be leaving the US on a daily basis. So long term, that's definitely a bullish factor. Short term right now, with the Freeport facility basically offline, it's kind of bearish right now. So Henry Hub prices, you can see that steady decline, for 25, 26, and 27. Prices have been on a steady decline since about, the early part of May. We currently think there's some value there. If if you have a position that you need to buy, if you have a contract that's expiring, or if you're on a managed product and you're taking layers, now might be a good time to take some percentages off the table. And you can reach out to us and we can walk you through those strategies and help you get those done. So US power markets, they've been, for the most part, over the last several months, there's been a lot of volatility, but for the most part, they've been kind of flat. They've been just kind of bouncing around, with the weather, and we expect that to continue over the next couple of weeks, depending on that heat. Again, is one of the main factors on the current demand in the power side. So to tie this all up, and what does it all mean is, weather right now with the heat is definitely, bullish. That's definitely wants to push prices higher. Natural gas storage with that surplus is pushing in the opposite direction. It's kind of bearish. Natural gas production is somewhat neutral to bearish as we continue to see those levels of 100, 101, 102 BCF per day of production. Will definitely put some downward pressure on the market. If we see producers react to these lower prices and start to cut back, that'll definitely switch to a bullish indicator. Drilling activity, still bullish, a lot less rigs that are out there actively searching for new supplies of natural gas and oil. LNG in the short term right now is bearish due to the Freeport facility being offline. But again, as those new facilities come online, we think long-term LNG is going to be bullish in the marketplace. Overall natural gas demand, again, the high temperatures are causing a lot of demand for, cooling demand, air conditioning, and that's putting a lot of stress on the power side. and is definitely helping to keep those prices, or not necessarily keep the prices, but doing whatever they can to push prices higher. Overall, the market sentiment right now we feel is somewhat neutral. Even with that heat sticking around, if production remains strong and we have the natural gas to meet the demand, it continues to just kind of keep each other in a neutral spot. If we see production start to decline and demand start to overtake that, it'll definitely be bullish, and the market sentiment will definitely turn. And essentially that last slide is just having a strategy, having a plan is key to anything that you're doing. We can help you with this. This is what we've done for, I've been in the industry for 27 years, helping customers develop buying strategies and educating them on what's going on in the market and identifying what are the current risk and reward components to the marketplace. So we can help you out, and we definitely have you covered for all of your energy needs. So please reach out to us if you have any questions, and thank you for your time.